The Vanguard Group Inc. is an American registered investment advisor founded on May 1, 1975 and based in Melbourne, Pennsylvania with about 9.3 trillion in global asset under management as of May 2024. Asset under management as of May 2024. It is the largest provider of mutual fund and the second largest provider of exchange traded fund ETFs in the world after BlackRock, iShares. In addition to mutual fund and ETFs, Vanguard offer brokerage service, education, account service, financial planning, asset management, and trust service. Several mutual funds managed by Vanguard are ranked at the top of the list of US mutual funds by asset under management. Along with BlackRock and State Street, Vanguard is considered to be one of big three index fund managers that play a dominant role in corporate America. Company type: private industry investment management, founded May 1, 1975, 49 years ago. Founder John C. Bogle. Headquarters Malvern, Pennsylvania, US. Key people: Selim Ramji, CEO. Product: mutual fund, exchange traded fund, index fund, asset management, risk management, stockbroker, sub advisory services. Revenue: 6.93 billion as of 2024. AUM: 9.3 trillion as of August 31, 2024. Number of employees: 20,000 as of December 31, 2023. Founder and former chairman John C. Bogle is credited with the creation of the first index fund available to individual investors and was a proponent and major enabler of low-cost investing by individuals. Third, Rex Sinquefield has also been credited with the first index fund open to the public a few years before Bogle. Vanguard is owned by the fund managed by the company and it's therefore owned by its customers. Vanguard offers two classes of most of its fund: investor share and Admiral share. Admiral share have slightly lower expense ratio but require a higher minimum investment, often between 3,000 and 1 lakh per fund. Vanguard corporate headquarters is in Melbourne, a suburb of Pennsylvania. It is satellite office in Charlotte, North Carolina, Dallas, Texas, Washington D.C. and Arizona, as well as Canada, Australia, Asia, and Europe. In 1951, for his undergraduate thesis at Princeton University, John C. Bogle conducted a study in which he found that most mutual funds did not earn more money compared to board a stock market index, even if the stock in the fund beat the benchmark index. Management fees reduce the return to investor below the return of the benchmark. Immediately after graduating from Princeton University in 1951, Bogle was hired by Wellington Management Company in 1966. He forged a merger with a fund management group based in Boston. He became president in 1967 and CEO in 1917. However, the merger ended badly and Bogle was therefore fired in 1974. Bogle has said about being fired, "The great thing about the mistake, which was shameful and inexcusable, a reflection of immaturity and confidence behind what the fact justified, was that I learned a lot, and if I had not been fired, then there would not have been a Vanguard." Bogle arranged to start a new fund division at Wellington. He named it Vanguard after Horatio Nance's flagship at the Battle of the Nail as MS Vanguard. Bogle chose this name after a dealer in antique print left him a book about Great Britain naval achievement that featured HMS Vanguard. Wellington execution initially registered the name but narrowly approved it after Bogle mentioned that Vanguard Fund would be listed alphabetically next to Wellington Fund. The Wellington executive prohibited the fund from engaging in advisory or fund management service. Bogle saw this as an opportunity to start a passive fund tied to the performance of the S&P 500, which was established in 1957. Bogle was also inspired by Paul Samuelson, an economist who later won the Nobel Memorial Prize in Economic Science, who wrote in an August 1976 column in Newsweek that retail investors needed an opportunity to invest in a stock market index such as the S&P 500. In 1976, after getting approval from the board of directors of Wellington, Bogle established the first index investment trust, now called the Vanguard 500 Index Fund. This was one of the earliest passive investing index fund, preceded a few years earlier by a handful of others. Financial management in Boston, an index fund managed by Rex Sinquefield at American National Bank in Chicago, and John McQueen at Wells Fargo San Francisco office. Bogle S&P 500 index raised $11 million in its initial public offering, compared to expectation of raising $115 million. The bank that managed the public offering suggested that Bogle cancel the fund due to the weak reception, but Bogle refused. At this time, Vanguard had only 3 employees. Bogle and two analysis asset growth its first year was slow, particularly because the fund did not pay communication to broker who sold it, which was unusual at the time. Within a year, the fund had only grown to 17 million in assets, but one of the Wellington fund that Vanguard was administering had to be merged in with another fund, and Bogle convinced Wellington to merge in with the index fund. This brought assets up to almost 100 million. Growth in assets accelerated after the beginning of a bull market in 1982, and the indexing model became more popular at other companies. Those copy funds were not successful since that typically charge higher fees, which defeated the purpose of index fund. In November 1984, Vanguard launched the Vanguard Prime Cap Fund in collaboration with Prime Cap. In December 1986, Vanguard launched its second mutual fund, a bond index fund called the Total Bond Fund, which was the first bond index fund ever offered to individual investors. One earlier criticism of the first index fund was that it was only an index of the S&P 500. In December 1987, Vanguard launched its third fund, the Vanguard Extended Market Index Fund, an index fund of the entire stock market, including the S&P 500. Over the next 5 years, other funds were launched, including a small cap index fund, an international stock index fund, and a total stock market index fund. During the 1990s, More funds were offered and several Vanguard funds, including the S&P 500 Index Fund and the Total Stock Market Fund, become among the largest funds in the world, and Vanguard became the largest mutual fund company in the world. Noted investor John Neff retired as manager of Vanguard Windsor Fund in 1995 after a 13 years career in which his fund beat return of the S&P 500 index by an average of 300 basic point 3% per year. In March 2021, Vanguard joined over 17 asset managers aiming to have companies within their portfolio to achieve net zero emission by 2016, a goal that parallels the Paris Agreement. Climate and indigenous advocation felt optimistic about this development, but stressed the issue that Vanguard most was to stop investing in companies that engage in deforestation, fossil fuel extraction, and environmental degradation. In line with their sustainability effort, Vanguard has put out a number of statements aimed at taking climate change within their portfolio and the world at large. Despite those statements, the company still continue to have companies within their investor portfolio such as ENAP, Ciptrol, CPNC, all of which contribute to fossil fuel product and the climate change. Bogle retired to Vanguard as chairman. Thanks for watching this video.